market is run down last night, went down last night, but can't really do an update on the regular trades with the SPY in it yet because of you have to wait till the market opens at 9:30. So I'm just gonna pause it after I go over this one trade. That it's not I'm doing it in simulation. I just wanted to show how I do it, and then I'll pause it and then do the SPY trade and then the SPY trades and then review. Okay, so oh yeah, what I'm saying is, so check this out right now. You know, market's around 3150. So all I do is I just looked. I went and looked at the there's not that much time. Volatility isn't quite as high as it was, so I'm trying to get a little bit more credit. So I went here and picked the 10 and the 13 day. Okay, so once you do that, I mean, it's 3150 or so. So here's the 10. I just start with like 50 points higher, see where it gets me. But you know, I think I'm trying to get. I mean, I just want to put them both on and see how much credit I get, and that's kind of how I start. So I just looked at 3200. Okay, so 3200 gave me 0.34, and then 50 above that is what? 0.18. So okay, so I put those on. 34 and 18. What's that? That's 16 difference. So why don't I just do it really fast? Oh, sorry, that's wrong. I told you the wrong thing already. Let me try it again. Here's 3200 is 34, so I'm gonna hit that. And then over here on the other side, I'm gonna do. I'm gonna look at what is 34 on the other side, or so. That's 3100. So that's about the same. So I can do that one if I want, or I can do that. It doesn't really matter. I'm just trying to get about a 16 difference, and so let me just pick it a little farther. A little farther is better, I guess. So let me click on this one. This is 30. So then I go to the next expiration for the longs, and if I go to 3250 on the call, see that's 20. So I don't remember, it was 32 before or something. So you click on that, okay, and then I'm gonna go to the put and pick around a, I don't know whatever I said, a 16 difference. So I'm just gonna start with 14. It doesn't really matter because you can adjust it in a second. So I click on this, and so you see how now, if I look over here, the delta is not quite flat. So I can address that by making the put, like that's 50 apart. The put is also 50 apart. So I can make one of them. Let's say it looks like what? It's two. You know, you can walk through the logic of it. I can do it. Let's see. It's easier just to click on one of them and change it really fast, see if the delta changes instead of having to each time. Yeah, that was the right way. So that, yeah, the higher the put, the higher the long put, the less sensitive it is to a fall, right? Which makes sense. Or you could do the short call the other way. But I'm just going to do this. So 2075, and that's pretty close. Maybe one more. 80. I actually like to be slightly negative, so let's see. So I could do this put a little farther. No, a little farther as well. Is that right? Let's see. Yeah. Get a little more credit.
Ding, ding. Ding, ding.
Go on to, I think my friend is calling, but I don't know for sure. I'm going to pause it. Hang on a second. Oh, sorry. Where was I? Just playing around with getting this set right. So you just play around with it. No big deal. Right. So like that. Like that. Okay. So you know, I don't. That's probably too far. So what did I just do? Fine. Yeah, like that. Okay. So now I just want to prove this once and for all, and then I won't keep doing this. But so check this out. If I say create duplicate order, you see. Well, actually, sorry. Let me stop. Let me delete that. When you put these on, you got to put on the longs first because it's too expensive. It won't. The margin's crazy. If you put these on first. So, like, look, check it out. Look at the margin if you put on just this. It's $12,000. Just this, almost like $11,000. Just this, $600. Just this, 700. You know, like 708. So if you put on this and this first, and then this and this, it's like that instead. So that's what I do. So I just put on the shorts the longs first and then the shorts. So because you can't do them together, you can't do diagonals in futures. At least not in Thinkorswim. I think you can do it in that Tasty Trade place. Tasty Works, whatever. Okay, so create duplicate order. So check it out. So see, it says 1250, 1275. So pretend it's 1275. Look at it for a second. Okay, I'm placing the order. If it's gonna fill instantly because it's so boom, it's filled. So there you go. Because it might move in the meantime, so I want to like be realistic about it. So that one's filled. So now I'm gonna do this one. And you put it on, click on it, wait to see, give it a chance to go up to the 75 or whatever, but I'm putting it on. By now it would be filled at this price. Boom. Here, because I'm doing this in simulation, obviously, for a little bit more. Create duplicate order. Now this one, the NAT is the lower price because you see how it's a little bigger spread, so it's not going to give you the. I mean, there's a good chance, and this is what I was trying to say before. There's a good chance I would get this. I probably would get this, but I'm not going to assume that for these. I'm just going to assume the worst all the time. So 27. Okay, so right there, 25, 25, 25. You saw how I went 27.50 for a sec, 25.75 for a moment. See right there, I would get it. But I'm going to assume that I wouldn't. So I'm going to make it 25.50, even though I'm sure I would get it, because I would have it on 25.75, and I would send it in. It would fill right now, but I'm not going to do that. I'm going to make it 25.50 anyway, just to be conservative about it. And then this final one up here. Okay, 25.75, 25.75, 25.75. You see, that's there you go. Okay, so those are realistic fills. Worse than realistic. I just wanted to show that. Okay, so Okay, so now what am I doing? Oh yeah, I'm going to. I thought, I know I said I wanted like $1,500, and maybe that will happen, but I'm thinking that I am gonna, since I'm doing it in simulation, I had a slightly different idea where I'll keep these on. So if this hits around 3,200, which is the short, look at the around the short strike, around this area, it's two of them, and look, if it keeps running, you just get out if it goes over the edge, and the same on the other side. You just get out. That's too. That's not close. That's too far down. So let's see, 3,100, 3,100, maybe 3,110, 3,110. Okay, so my first try, if it doesn't go to 3,110 there, or 3,200 there, I don't know, by within a few days, which it will, but if it doesn't, I'll get out. Now, you don't make as much money because look how I have to put this out farther, so the theta isn't as high. But if you do it closer, the theta is more, but then the thing is narrower. That's kind of why I'm saying that this trade may only work when the volatility is pretty high, and you know before you get in because you know how much credit you're getting. So this may not work, and that's why I'm doing it in simulation as an experiment. But the thing I was going to try is if it goes up here, whichever one you go, like you're going to get whipsawed on the way back. But this is an opportunity, and this is kind of what Ryan does. When it goes up here, that's when I buy an extra put or call, an extra one on the low side. And this guy, I buy an extra long call if it goes way up here, or I'll buy, if it runs down here, I'll buy an extra long put. And so, I'm sorry, the other way around, but you know what I mean. Buy the extra long option, whichever way it goes. And that way, if it reverses again, you can use the MES hedge still, but it'll be way more effective and way cheaper. So I think by doing that, by adding that wrinkle, it makes this trade more likely to be able to trade it all the time. But I'm going to test that. So that's what that is. Now I'm going to pause it here, and then just when the market opens in 14 minutes or maybe a few more minutes, depending on my coffee situation, I will update the other trades, and that's it. Okay. Oh no, also sorry. This is I'm losing a little bit, not a big deal, but it's the market's been going down. This says $36, and this is in simulation, and there's a little slight discrepancy, but I don't think it's actually I don't think there is a discrepancy. This doesn't account for commissions, and this one does. So you see this says 49.43. So I started with 5,000 even, and you can see that wait, doesn't it say cash somewhere? I think if I hit I hit this. Oh yeah. So 55.05 is, that's how much the thing is worth right now. This one. So I mean, $505.76 is how much that spread is worth. That's why that says that. So okay. So anyway, I've already explained how this trade works and what I'm doing with this trade. I'm just kind of showing day by day, because at the end of the week it's going to be probably minor loss. I mean, look, it fell kind of a lot already. That was a pretty good move down, a couple hundred points in the Dow or something, and it's nothing. It's hardly a loss at all. So this is very resilient, but you're not trying to win this on a week-to-week basis. You're trying to win this on a longer time frame, which is why I think it works with the other trades. And I'm keeping it in a separate account right there. And I never put any trades in this account in my life. I opened a brand new account, $5,000 in capital, and just trying it. Okay. Pause. Okay, I'm resuming here really fast. I already went through the put spread and the iron diagonal. I put this one on. This is in simulation, but it's fine. It's I demonstrated why it's real. So I'm waiting to see what happens if it goes up here or down there. And this time when it does that, I'm going to if it whipsaws back in the middle after that, that's fine. Plenty of money. If it goes farther, keeps going, I'm going to look to put on a long option on the opposite end, whichever way it goes. So I think that might make this one even easier to win when volatility is low. It seems pretty easy to win when volatility is high. Okay. So I'm waiting on that one. So, and the put spreads, I already explained. Now it's 34 cents up because the market's rebounding. So that was just yesterday. And this should coincide approximately with this is the real live trade. See, it's $7 down. That's the commission on, so that's fine. So that all tracks. So, okay, so my core trade is here. Let me see which one of my has bull. Okay, so first of all, here's the core, and to make it kind of simple, I just made a little chart there so you can see it. So this is getting whipsawed a bit. So you got in. It looked like it wasn't for a while. So you only you don't trigger a stop. You don't on the way up, only on the way down. So the entry's on the way up, stops on the way down. So you got in at 3140 and 3160, and then it stayed up here for a while, and then it came back down. That was like 9 o'clock, and I probably couldn't get out then because of you can't get out the SPY. So okay, so then it falls back down. That's all fine, and finally it hits the 3150. So you got into you got into 3140, 3160, and you got knocked out at 3150, and then back into 3160. So you got in at 3140, 3160, got knocked out at 3150, and back in at 3160. Shows where we're at. So then I think the next thing that's going to happen here is it's going to stay above 3150. If it stays above here, we're just going to take our profit. If it falls again, it's going to hit 3140. Did I say that? Yeah. If it's 3130 there. So basically, I'm sorry, I'm not being clear. If it stays above 3150, there's nothing else to do until just take the profit at the end of the trade. Or if once it goes below 3150 again, that will change the way it looks, which means it'll look like, if it goes to 3150 again, it will look like this, but keep in mind it'll be down here. And then at that point, it'll be between 3130 and 3160. And if it triggers at 3130 and keeps going down, it'll look like, not that, like this, 3130. But you'll be down here. So all still looking good, but this is not what happened yet. So these two haven't happened. So it's how it is right now. So let's see what happens next. That's what happened on the core trade. The bullish trade right here is, I think that's the one I did right. So in the bullish, of course, this happens sometimes. Sometimes it doesn't happen at all. You don't whipsaw at all. So that's what I was trying to say. Sometimes you get whipsawed a few times, sometimes not at all. So let's see what's going on here. So it went up to 3150 and then 3180, right? So it hit. So once you got in, it went up to 3150, and then kept going and going to 3180. Remember, the stops only get triggered on the way down. 3180. Then after those two, you hit 3170, and then you hit 3140. So 31, 50 and 80, 70 and 40. So you triggered 50 and 80, and then 70 and 40. Okay. So after that, it went back into 50, which is right there, 50. And that's where we are. So now it's either going to if it's going to get stopped out if it goes back down to 40, or it's going to enter a new one if it goes up to 80 again. So, and I might change the 80, that's why I'm doing this. So let's see, stopped out at 40. So if it gets stopped out at 40 again, it'll be like this. And then you'll be below here. And you'll have up till 50, so you'll still make money. Or it'll go up to 80. And if that happens, then you'll be above this. So that's what's going on there. It's all looking fine. Okay. Did that, and then Ryan's trade. So this is Randy's version of Ryan's trade. You put this on. Actually, it's not. I guess this is your custom version of Ryan's trade. And by the time I try to put it on myself for my own account, the price had moved, so I did the same thing as you, but I just shifted it up. I got a few cents less than you, but those are all your strikes. That's yours, and here's mine. I just moved all the strikes up one. So you got, 85 and 157. I got 2 cents more. I got 1 cent more credit than you, but 4 cents more debit than you. So, I'm 3 cents worse off. And we'll see. I'm hoping that this works. I don't, know that it proves anything. Let's we just know this thing's get crushed so bad so many times. I mean, it was up skyrocketing, and this thing went from whatever it was, like 29 or something, whatever this was, to half something. Anyway, we got to watch these numbers and see how this works. Hopefully, this super bad volatility crush is rare. Because these are easy trades, and I'd like to put them on. Although I think you said it was the backwardation that causes it to be easy to do like this. But anyway, I'm gonna also look at maybe putting on these cores, bullish and bearishes, maybe with a vertical. Maybe I'll just do one of them with a vertical, like the core at first, and just see how it works, because that might be the solution to any volatility sensitivity. I haven't tried that yet, but okay. That's it.